K. Johnson with Liberty and Finance. And back with us today live is our good friend Andy Schectman, the CEO and president of Miles Franklin. Andy, thank you so much for joining us today.
Elijah, buddy, it's always great to see you. I don't think people know, but you and I go way, way back. And you were in high school, homeschooled high school kid who got it more than most people twice your age, who was interviewing me when I was still green behind the ear and doing podcasts and whatnot. So it's great to see you, buddy, and always a pleasure to catch up with you. Thanks for having me back.
Well, it's always a pleasure to speak to you, Andy. We definitely do go way back here. Our viewers have been appreciating this, weekly market update you've been doing with my father Dunnigan for a few years now. And we love doing these live streams because it really can get the viewers engaged here. We do have a lot of topics to cover today. The main topic I wanted to start with was the Ukraine-Russia conflict. It's very puzzling what is happening and frightening to a lot of people. As soon as Trump wins, Biden then really pushes hard to see what the effect of having, the Ukraine war really escalate here. Ukraine is now shooting U.S.-made missiles, long-range missiles, into Russia. So your perspective on this escalation here, and it seems like as Biden is leaving, he's just kind of pushing us closer to World War III.
Yeah, you wonder what the Ukraine has on the Biden family. I mean, it's really insanity to push to that degree. And if it were the other way around, I said this on my own podcast last night. Imagine if this was the United States in a war with a South American country, or God forbid, a Mexico. I mean, just suspend your imagination for a moment. And a bordering country, and Russia had provided 200 billion in cash and weapons, had provided strategic intelligence on where to fire and how to fire and how to fly the F-16s that they gave them, or the MiG jets, and then provided all of the missiles, including long-range, sophisticated missiles that they would need understanding and intelligence on how to use them, how to fire them, how to lock in the coordinates, all of those things. They don't just understand that. They're being fed information. And it's almost a declaration of war. It's insanity. It's complete and total insanity. And you'd like to hope that Putin understands this. But here you get a spokesman for the Kremlin coming out and saying that they've modified their use of nuclear weapons, or their nuclear weapons doctrine, saying that new modifications signify the use of Western non-nuclear rockets by the armed forces of the Ukraine against Russia can prompt a nuclear response. Now, we'd like to hope that that's just rhetoric, but at some point, you have to ask yourself, I mean, is this just the stupidest thing you've ever heard? To contribute to this degree, to be involved in this war that really we shouldn't be involved in, and to continue to fund it to the degree that we are, to provide weapons, to provide F-16s, to provide these missiles and the intelligence, and the $200 billion that we've given them with no congressional oversight. Yeah, it is a provocation of war. If it were the other way around, people in this country would be freaking out and screaming, this is a war. It's reckless. And when you think about it, this is the most chaotic geopolitical period in all of our lives, at least probably since World War II. And when you think about, what this truly means, it's insanity. I mean, let's just hope it doesn't provoke something much, much worse. But you have to ask yourself, what the hell are they trying to do? I mean, typically this would be a transition period where the president is wrapping things up, not engaging or escalating a war that is dragged on for far too long, and we've been far too involved in, and now bringing it up to this level using sophisticated long-range weapons that could actually outfit a nuclear warhead is the most foolish thing I've ever seen. And then let's not forget that when we talk about the finances of this country. The Congressional Budget Office says even if you get Vivek and Musk to come in and trim all of the fat, that 100% of tax receipts would go just to pay the interest on the debt by and mandatory entitlement, which they said they won't touch, like Social Security and Medicare, by 2031. And that doesn't take into account things like defense spending, which are discretional. So we're bankrupting our country. We're inciting a reaction from a nuclear powered country. I don't know. That to me, we should have listened to our founding fathers. And if I were Trump, I'd close every damn military base across the country. I'd bring every one of those across the world. I'd bring every one of those people home. I would put them to work in building the infrastructure, give them a job, pay them the money we're wasting on maintaining these military bases around the world, pissing everyone off. And what do we have a military base for in Germany or these military bases in Japan? In fact, it's interesting if you in terms of Japan, we still occupy, I just want to read this to you real quick. We occupy 85% of the Japanese airspace. And this is since World War II. We've had the space that's dedicated for the US military. What the hell do we still need that for? So all of this cost, all of this overreach, all of this, this is why a lot of the countries around the world don't like us. We're in their homeland, and I don't know. It's really stupid. If it were up to me, I'd bring every one of those people, every one of those military people home. I'd close the bases. I'd fortify our borders. I would build up our infrastructure with the money we're spending and use the military to do that and make this country far, far better off in the long run. Of course, it would go through a transition period, a painful period, of course, but I mean, enough is enough already. And who wants to think of a world where the threat of nuclear war is actually something that is being threatened or bounced around? It's just more stupidity from an administration that's done more to destroy this country in the past 4 years than any of the external foes that are supposedly our foes could have ever done. Just stupid. Too stupid to be stupid, Elijah.
I thought the too stupid to be stupid part was supposed to be at the end, but I guess there's so much that is too stupid to be stupid right now. So it has to be out throughout the interview. It's crazy what is happening. And I think what is really even more remarkable is the price of gold we've seen recently, taking this beating, $200-300 off its all-time highs. But today we are seeing gold, rise about $25 or so. Your take on the recent pullback, and then also the jump in gold prices we saw today based off of this geopolitical news?
I mean, first and foremost, price is controlled in the futures market. And the big decline in gold and silver futures over the past few weeks was, I think, a realization by the traders that there was, I guess you could say, a sense of people being gullible enough to believe that the Trump administration would halt the upward trajectory of spending, that inflation would be reined in, that the markets would go up eternally because of the Trump trade. And he may be good. And let's just call it what it is. I'm very happy that Trump was elected, and I hope we get a good portion of our culture back. If you've listened to me long enough, you know that I rant and rave about the borders and the election and the judicial system and the institutions that made this country special. The way you grew up, the way I grew up, with respect. And like I always say, my parents were hippies. I mean, I was the jock, but my parents were hippies. I respected everyone, no matter what their lifestyle was. They didn't have to be celebrated, where merit was far more important than lifestyle, where equality is stupidity, where equal opportunity is what this country was founded on. This is what make people strive for greatness. I come from nothing. My family comes from nothing. I say it all the time. My dad's middle name was Miles, and his best friend who lent us 60 grand to start a company in a one-room office the size of a closet in 1989 before the internet existed, his middle name was Franklin. we took a risk, and it's amazing that we're here 35 years later. And I worked my rear end off. I am the epitome of equal opportunity, not of equality. Um, and I think that there was this sense that, and rightfully so, people after living in bizarro world for the last 4 years were just happy to have some hope of restoring the American ideals, which have been whitewashed. No matter what side you fall on, um, I think people were optimistic, and so the decline in the futures um, is, I think, the traders started the paper price down, and it started hitting stop after stop after stop as the hedge funds covered or sold rather. It allowed the commercials to cover. They covered almost 16,000 gold contracts at 100 ounces apiece. Do the math, it's a lot. They covered almost 6,000 silver contracts at 5,000 ounces apiece. It's a lot. So the traders took advantage. They've been getting destroyed over the last several months in with the rise in gold and silver. There's still almost 200,000 contracts short on COMEX in gold and about 33,000 short in silver. So they still have large short positions, and every dollar up in gold and silver, they were getting hammered. They used this as an opportunity to kind of level off their balance sheet. But here again, much like we've seen for the last several years, these corrections are very shallow and they come right back up. And that's because the rest of the world knows we're in a pinch. And they use these opportunities where the paper price is smashed down to buy and to take possession and take delivery of. And I think it speaks to the real demand for gold and silver. And we're not even talking physical in retail. We're talking on a much broader basis. The biggest money in the world understands that. I think that this is a transition period away from things like US Treasuries, which again are getting eviscerated as the 10-year goes higher, which has been weaponized, which has risen by 500 basis points in a year, which is succumbing to inflation. And because of the weaponization and because of this inflation, and ultimately, I guess it's a long shot, but you could even say default risk. Um, and what we did with Russian treasuries is default. I mean, call it what you want, call it sanctioning. It's stealing. We defaulted, and we used it to fund the Ukrainian war. And these are things. They're doing the same thing in the European Union. Um, these are very provocative moves, and so the rest of the world is saying, "I don't want to hold treasuries anymore, and I'll buy commodities with it." But they're very shrewd in the way that they do it. They don't buy it the way most people think they should. Just buy it all. Well, then the whole thing blows apart. Instead, they're doing it far more methodical, far more diabolical. They're playing the long game, and they're every time we're stupid enough to knock it down, they're there with dollars that are losing value and treasuries which are rolling off their balance sheet and using the proceeds to buy things like gold and silver, and boom, it comes right back up again. So it's not going to be straight line, but what we see with Trump is something we should be excited about. We should be happy that they're going to address all of the things that they are addressing, but it doesn't change the fact that one way or the other, whether it's orderly, where Trump were to do all of these things, bring back manufacturing, in order to do that, in order to do the things that he's talking about, we don't have a manufacturing base. We don't have the facilities or the machinery. You'd have to build all that. That takes time. You'd have to train people. All of the things that he wants to do to become more of a protectionist country, if you will, America first. Well, that could send us into a Great Depression. Or maybe it's far worse than that, and he presides over some form of a reset. Any way you look at it to get to the other side, and I'm optimistic. I really am. I'm optimistic for the future of the country, more so than I have been for the last 4 years. But that doesn't mean that we don't have to go through some event, whether it be orderly, which probably not, or somewhat chaotic, whether it be a depression or a hyperinflation or a combination of the both, where it's hyperstagflation, where the Great Depression 2.0 meets the printing press. One way or the other, you have to pay your bar tab. And I think that's coming, and I think the world understands that, and they'll choose inflation over the very, very difficult decisions unless they're willing to slash military, slash Social Security, slash Medicare, slash pensions slash military or veteran benefits. They're not going to do that. And if that be the case, then it will only increase the amount of debt that is accumulating day by day by day to the tune of $3 billion a day increase. And even slashing all of the waste, the interest just on the accumulated debt is moving at such a pace that it will overwhelm by 2031 everything. It will be the largest line item across the board, only allowing them to make Medicare and Social Security payments, and everything else, all discretional items will have to be borrowed. And of course, that probably means higher taxes as well. So there will be pain to deal with. What that looks like, I don't know. And we'll get through to the other side. But what it also means is that we can expect, I think, a good deal of inflation, which should do very well for all commodities, and will probably do well for stocks and cryptos too. Probably will. But in terms of measuring it in ounces of gold, my belief is that all of these things will fall in terms of its relation to an ounce of gold. And the rest of the world is done taking our treasuries. The appetite for our treasuries is completely and totally gone. And maybe you bring in a Judy Shelton to one of the Fed governor positions who has enough pull to actually introduce legislation to do the 30-year treasury redeemable in gold, as she speaks of, to give some form of incentive to hold our debt, where you have to be out of your mind to buy a 10-year treasury right now. To me, it's uninvestable. Inflation being so much higher and there's so much risk in holding it, at some point, these kinds of things will need to be addressed. And when you have the level of indebtedness, we have the needing at least 10 trillion a year to finance debt that's rolling over and new debt. Who's going to buy all of those treasuries? Does it mean that ultimately it's the Federal Reserve, which is monetization, which creates hyperinflation? I mean, any way you cut it, we have to go through that period of darkness, of pain, of paying our bar tab. And I think there's no one better to administer that than Trump. But to think that the reasoning for holding commodities just vanished is a big mistake. And that's what the traders used to clean up a bunch of their short positions that were really butchering their balance sheet.
Now, when it comes to the BRICS nations, you mentioned how, a lot of them are accumulating gold, and this has been a constant theme that we've really covered every week here. I did want to ask you about an update on that. Prices are down a bit from where they were. So I know last week you said the BRICS nations are probably taking an opportunity here to accumulate more. Did you want to give us an update on the BRICS and their strategy?
Yeah, I mean, look, to me, there are a few things that stuck out. It's been relatively quiet since their big meeting in Kazan, where I talked about how the BIS, in essence, enacted espionage against the BRICS countries. It's right out of a James Bond movie, as far as I'm concerned, threatening to pull the plug on Enbridge at the 12th hour, saying that they couldn't be part of anything that the BRICS are trying to do with Enbridge, because they wouldn't be part of a country that is, or be part of a program where countries involved are being sanctioned by the West. It's as if they forgot that Russia was the R in BRICS. And after 3-4 years of developing Enbridge with UAE, China, Hong Kong, and Thailand, that all of a sudden at the 12th hour, when it's operational, they come and say, no, we can't do this. Russia's being sanctioned. Really? Well, where the hell have you been for the last 4 years? That was a big deal. Another big deal to me was a comment that came out of Japan. And so you had one of their principal foreign advisors who said that he said that America first mantra that Trump will bring out will mean that he'll have little interest in the U.S. Japan or even the U.S. South Korea relationship. Now, I can't say that that's true, but this is what he said. And he said, as a result, Japan will have to conduct its own foreign policy. And I found it interesting where he talked about a skillful way to manage the power balance with China, Russia, and North Korea. And he said this should be a golden opportunity for Japan. We can take back the initiative and become a truly independent country. He's the one who said, and by the way, he expressed frustration that 85% of their skies are in effect America's skies. where the U.S. military bases account for a substantial acreage in their land, and that since World War II, they've controlled the majority of all the airspace over Japan. He says it's ridiculous. It's interesting when you hear Japan mention BRICS countries. Jim Willey has talked about the fact that maybe Japan would join the BRICS when it's every country for themselves at a certain point. I also think it's notable to mention that they had talked about developing the BRICS metals exchange, which is something that is purely logical to me. I think they will. I think after the Western exchanges are exposed for what they are, a system that allows massive rehypothecation, massive naked shorting by Western bullion banks who control the price and have for a long time. And now these countries are using that leverage, using that stupidity against us by standing for delivery slowly, not and methodically, not too fast to, the game will end. So they do it enough to where they are literally bleeding the coffers dry, and that will continue. And then when these exchanges or the Western exchanges, the COMEX and the LBMA, are viewed as fugazi, I guess you could say, you will see the rise of the Dubai exchange, the Moscow exchange, the Shanghai exchange, and perhaps even a BRICS exchange. These countries are shedding their desire to hold dollars, but more importantly, treasuries. And that was part of the petro deal. That's what's financed our lifestyle. That's what finances our debt spending, is the purchase of these treasuries, which are no longer really of any appetite for these countries. Instead, they're buying commodities like gold, like base metals, like silver, like anything that is tangible. Like I often point to China buying the London Metals Exchange. That's not by coincidence. They want commodities, they want tangibles, and it's a better place to put it than our treasuries, which have all of these issues. So another thing that we continue to see is rhetoric about the relationship between China and India on the mend, that the border issue is supposedly behind them. I think it's very important for them to show the world that they have stability. And at the same time, we now see joint naval exercises on tap for Iran and Saudi Arabia. This is Sunni and Shiite. They've hated each other. Remember, China brokered a peace deal last year between the two after the U.S. has never been able to do that. China comes in and does that. So again, what we are seeing, I think, is a concentrated effort to continue to do more of the same, accumulate commodities, build infrastructure, their BRICS pay, their BRICS clear, their BRICS bridge. All of this stuff, I think, will only be crystallized by what the BIS did. And what the BIS did is one of the worst things I've ever seen. And then you get a State Department spokesman who says any challenging of an alternative system, rather, any attempt to bring in an alternative system that threatens the dollar's reserve role or the SWIFT system is a threat to global democracy. I mean, I think that's pretty rich. That's a lot of hubris. And I think the BRICS countries, after seeing what the BIS did, the Bank of International Settlements, which is a Western institution, really very underhanded. I think it will only crystallize their resolve. The presidency moves to Brazil this year, and they've talked about Brazil's role will be to integrate the countries that have expressed interest, about 59 of them. So we'll see. I think it's important to understand that this is something that is moving, and maybe it will move faster as a result of this. I don't know. But here again, bringing Trump in with, again, threatening countries with sanctions if they abandon the dollar, imposing tariffs. These are all things that will just incentivize and crystallize the resolve these countries have. And looking at trusting the Western institutions like the BIS, once you break that kind of trust, who knows where things go. But, I think a lot of people have a hard time dealing with the fact that this is monotonous, that this takes a long time, that it's not instantly gratifying. But I think it is moving in that direction, and you can see it if you look closely. They're trying to show the world they have their act together, that they're favoring peace and unity over aggression and coercion, that they favor commodities over treasuries and local currencies and trading over US dollars. This is all a trend in motion and hasn't slowed down just because President Trump, fortunately, will take office in January.
Yeah, I think it's good, definitely to realize that, I think Trump can do a lot of good. I'm very happy that he was, elected. I think Kamala Harris would have been a disaster, but at the same time, one person can't always fix everything. And there are some systemic issues here, like the national debt, as you mentioned, like, what we've already done with the US dollar and these other nations moving away from the US dollar, that probably those trends won't change. So it's important to look at our own finances and look at our own situation and make our own decisions. And every week we offer weekly specials in precious metals. So if our viewers want to kind of do the same thing central banks are doing, they can acquire precious metals at really good prices. So what do we have this week for our
You know,
viewers?
as
And
I'd say to your dad
yeah,
every, I have no idea, as horrible
okay.
as it sounds, but I know that you do. I can comment on it if you'd like.
Definitely. So we'll share the screen here. We have, let's see here, the gold British eagle and lion coin here from the UK Mint. Can you tell us a bit
It's
about
a
that? That
limited
one's, yeah.
edition coin sold at a bullion price. You know, when people sell limited edition coins, they usually come at some stupid price. This is a on par with what you'll pay for most sovereign coins. It's limited edition. It's a cool coin, and it'll save you, 20, 25 bucks, whatever it is, an ounce over American Eagles. There's six major mints in the world. The UK is one of them. It's a cool coin. Nothing outrageous, but it is a limited edition. So um, people who like animals might like this coin, and it's a good value in relation to the American Eagle.
And also, obviously, in addition to gold, we talk about silver as well. And if we look at the gold silver ratio, it's still historically high compared to where it's been in the past. So a lot of people like to look into what we have in silver. It's more affordable as well with gold, up at 26, 2,700 at the moment. So your take on the silver special, the silver Philharmonics at 309 over this week.
A lot of people like the Philharmonics because they're apolitical. You don't have the Queen or the King on the coin, as you see in Australia, as you see in the UK and in Canada. They're musical instruments on one side, and that's the organ behind the gates of the Philharmonic Orchestra. They're probably the most commonly traded silver coins throughout Europe. They're fantastic. I love them. If you're looking for a good value in a sovereign mint coin, that's it.
Definitely. And on that topic, now we're going to take some viewers' questions. One viewer wants to know your perspective on gold versus silver at the moment. I know, it's a constantly changing market, right? So the gold silver ratio has been going up and down. But your take right now, I know central banks are accumulating a lot more gold than silver, if at all. So what do you think
Well, let's
is,
not forget that the Bank of Russia came out and said they are going to start accumulating silver every day for the next month, adding it to their strategic stockpile. That was something that was somewhat shocking. We've never heard that from a government, really, to my knowledge, before. You have India that is who has bought, I don't know, between 8 and 900 million ounces of silver over the last 3 years. They're buying it at levels that far exceed any central bank purchasing. You have China, as I mentioned in an interview I did with Sean Kuhn from Dolly Varden, who confirmed they're flying all around Latin America, buying doré and concentrate from the miners directly. They're the second largest producer of silver in the world. And David Morgan said, well, they'll actually tell you they're the first largest. Who knows? But the point of it is that you are seeing governments accumulate silver and it being bled dry from the exchanges across the globe. To me, it represents the maybe the best value I've ever seen ever in any commodity. But in the end, you're right. In the end, gold is the only other tier one reserve asset. I wouldn't count gold out. But when we talk about value, it's pretty darn hard to ignore the value that is found in silver. When the dust settles, I think the place to be is gold, and you play that silver to gold ratio. To me, it's the trade of a generation. When someone says to you, you can double your position, it's usually comes with great risk. I look at the silver play as one of the greatest asymmetrical risk reward trades I've ever seen, meaning low downside, high upside. Um, and Trump was Musk was on with Joe Rogan recently and said that you could create, if I think it was 100 mile by 100 mile grid of solar panels, you could power the entire United States. If you pull it up, just Google it, it'll pop right up. It's about a 20-second clip. And with a guy like him in there with that kind of pull, who knows what the future is for silver. I do know that when 8 commercial banks hold the largest short position that of any commodity traded on COMEX, as Ed Steer showed on an interview with your father not too long ago, you ask yourself, why the hell would they do that? Why would 8 banks be shorting a commodity like that naked, meaning they don't have the silver to back it up? For what reason would they risk that? And why is there between 4 and 6 billion ounces short on the LBMA? I think these kinds of manipulations that the West has been involved with for a very long time is being exploited by these countries slowly. So I think it's the trade of a generation. And I think the silver to gold swap is as good of a speculation as I've ever seen in my career. With, the worst case, you're stuck with silver. Who cares? But the likelihood of seeing a 40-ish to 1 ratio where its price is average for almost 200 years, that's just a double is reaching average. And that would still be 6 times higher than it's coming out of the ground at 7 to 1 and decreasing. And another 260 million ounce shortfall this year in silver, according to the supply demand numbers out of the Silver Institute, who again omit military usage of silver. This is why the banks are short. This is why the Western banks are shorting, because the military industrial complex, which is very powerful and very influential, needs silver to make high-tech weapons, and they're all Western based. And this is what these other countries understand. They get it. And I often say it's the comment made by the gentleman who is running, I guess you could say, the progression of the BRICS grain exchange, where he says we produce and consume more grain than the West does, but we can't control the price. It's controlled on COMEX. With the development of this grain exchange, that will change. They understand what we're doing in precious metals as well and using it against us. So to me, gold is the ultimate place to be in the end. If I had only one trade to make, period, it would probably be in gold, because it is the only other tier 1 asset in the world. And I think when you're making decisions like this, maybe profit isn't your primary concern, although I think gold will go higher than people think possible, because it will go much higher to be pegged to a new system, whether it be one that Trump issues. And I think that's how the West could derail a lot of the demand for the BRICS currency, is to be the first one to do it. There's a lot of talk of it. You have the Senator Loomis from Wyoming, who talks about revaluing the gold. You have Judy Shelton, who talks about adding gold into the system to gain a trust. Who knows? But in terms of value, in terms of upside potential, in terms of asymmetrical risk reward, I have never seen anything like silver. And look, the market, as everyone knows, can stay irrational longer than people can stay solvent, or longer than people's patience will allow them to stay rational. I just still think it's hard to ignore the value that has been created through suppression on COMEX and the LBMA, and that seems to me to be challenged. It's being challenged right now, and I think it's never been challenged. These countries were not in a position to do so. They are now, and they're coordinated as well. They're coordinated and very wealthy, and they understand what we're doing, and they understand that this is a better thing to hold. As Zoltan Pozsar said, Bretton Woods 3, it's not about debt instruments like U.S. Treasuries and inflating U.S. dollars. It's about commodities, and that's the progression we're seeing. So to me, yeah, silver is the value of a generation. In the end, I would switch a large portion of that to gold if we saw a 40-ish to 1 or better, 42, 43 to 1 or lower silver to gold ratio. It's a double. So yeah, I think that's definitely in play as well. And to me, it's almost a 2-foot putt, not quite a gimme, but it's as probable gets when it's coming out of the ground at 7 to 1. And we continue to see massive deficits, which are becoming structural, almost $1.5 billion ounce shortfall over the past 5-6 years. You can't make that up. And the demand for silver is increasing, not decreasing. So yeah, silver now, gold later. That is the playbook. And I'll stick to that. I think it's the opportunity of a generation.
Now, you've spoken a lot before about the manipulation in the precious metal markets. You mentioned how, there are a lot of there was a lot of short coverings as we saw the price fall here. We have a viewer's question on that. When and how can we get our government representatives to put a stop to all the manipulation in the metals markets? Now, I guess this kind of also brings into mind, that Trump's going to be the next president. Do you think he would look into that at all? Your perspective on that?
It's a good question. I mean, he wants to bolster the military, so who knows what that truly means. I think he understands the significance. When he wants to bolster the military, you need to have silver. Maybe this is why the U.S. Mint for 4 years hardly produced any silver eagles, despite the demand. Maybe they've been stockpiling it. I don't know, but you would hope that that would be the case. I mean, you can't pretend to be um, have the be the center of free trade and have markets that are being suppressed and manipulated. And now you have countries that are wise to it. So um, I don't know, to be honest with you. I think gold will probably be allowed to run much further because I really do believe gold will be revalued. I think it will stand behind a new system, whether it be in the BRICS or in the West. Even the head of the IMF, who's big into the development of crypto of central bank digital currencies, Kristalina Georgieva said, if a CBDC is not pegged to something, it's fiat. What other things can you peg it to? And I think they will let gold run. And silver and gold have a 90% correlation throughout all of history. They don't move in unison, but they often have a lag effect. I could see silver running to a level that most people would think is crazy. Maybe it's 75, $100, 200, who knows? Um, but it's inelastic, meaning you only need a little bit for these items, these items like cell phones, like anything electronic or that conducts electricity needs a little bit of silver in it. Where it becomes a little murky is what does it mean for the military industrial complex, and what's Trump's plan for the military industrial complex? Because there's no question that you need silver to build high-tech weaponry. I've had this admitted to me by a consultant for the DoD, who I've talked to 2 or 3 times, once in Las Vegas and twice in Vancouver in person. And he confirmed that all of the high-tech weaponry has, at least in the cones of all of these missiles, has a lot of silver in it. And go to John Forrest Little's silverwars.org. He lays it out beautifully with fact, with support in a chronological form that makes you say, it's interesting that you have 8 Western banks holding down the price and you need massive amounts of silver for military equipment, and yet it's not accounted for in the supply demand numbers of the Silver Institute. What does that mean? Is this why you have the 8 banks short massively in London and the US? Yeah, I think it is. So look, again, you can only manipulate a market for an extended period of time by pushing it in the direction it's going. No, none of these countries had the desire to accumulate this stuff. And just look what India is doing. There's no question that they get it. So I think it would be foolish to artificially suppress the paper price. It will only create strain and stress, but I think they'd be better off by just printing more money and allowing a higher price for these metals, especially if they want to, if Trump wants to, have any credibility for the U.S. markets. You can't continue to do this when the rest of the world is wise to what we're doing. So I don't think it will. I don't think that he will allow the continuation of naked shorting to the degree that it is if he had his choice. But here again, these are very powerful people and they've been able to do it for a very long time. I don't know how it ultimately plays out, but all manipulations end, all of them, and usually pretty badly.
Again, for our viewers here, Andy is here to answer your questions, so feel free to put it in the side chat there right next to the YouTube video. One other question that we have from John Ellis is, can you explain for the less scholarly people why cutting of interest rates by the Fed is going to cause the economy to crash?
Well, because you have, some people call it bond vigilantes. They cut the federal funds rate, which is the overnight rate. It's the front end of the curve, the shortest duration, and they try to bring down the short duration treasuries. At the same time, the back end sells off because the back end, they're selling bonds. And as you buy bonds, as you buy them, then interest rates fall. As you sell them, interest rates go up. And what you're seeing are people selling 10-year treasuries, governments selling 10-year treasuries. They don't want to hold it because they believe inflation is only going to get worse the way that they're doing things. By lowering rates, this is a form of stimulus. It creates a weaker, less purchasing power for your currency. His policies are very inflationary, and the bond vigilantes or whoever it is saying, I'm not going to hold your 10-year treasury at this rate. We demand a much higher rate. And the 10-year treasuries, if you look at since they've decreased the front end of the curve by 75 basis points, 50 and 25, the 10-year treasury is up over 90 basis points. It's gone the other direction. And the 10-year is what all the banks hold. The 10-year is what the mortgages are based off of, what credit cards are based off of, the refinancing of all the commercial real estate loans. It's putting tremendous stress on the banks, especially. And, the banks who, you look at Bank of America, it spent hundreds of billions of dollars on treasuries short term. I don't know if they were 10-year. I think they were at under 1%. That when the rates were down to zero, and now they've been eviscerated as rates have gone up to 4+%. They're down 10 times or more what they were worth. And it puts great strain on the system because a well-capitalized bank, for example, according to the Basel III regulations, they have to have 4.5 cents on the dollar. During the pandemic, it was zero reserve requirement. So 4.5 cents on the dollar, if there's a run on the banks, which I believe there will be. After what we saw at First National Bank of Lindsay, Oklahoma, it's the first bail-in we've seen since the legislation was written, where half of the uninsured deposits are poof, they're gone. And when you see, I think, more bank issues as the overnight reverse repo market has been drained down and the BTFP program is over, this was the form of liquidity to these banks that has now been yanked. They have to sell their assets, which are 10-year treasuries, which are worth less than when they bought them. And that's what realized gains become or losses instead of, the unrealized losses that the banks are drowning in. And so as rates go higher on the 10-year treasury, as they try and push down the front end, no one wants to hold our treasuries of any duration. I've said it. They're uninvestable when inflation is running much higher than they're telling us. John Williams says it's 11%, not the nonsense 3 that we're talking about. So if that's the case, why would you hold a 10-year treasury if you understood inflation is 3 times the yield? You wouldn't. And so that's what they're saying effectively is that we're going to sell bonds and push the back end up until you pay us more for holding any duration for all of the risk associated and the inflation. So the problem is that the entire economy really is based off of, or much of it, off the 10-year treasury, especially the banks. So as those rates go higher, remember what happened when the 10-year went to 5%, you started to see the banks blow up. Well, if all of a sudden no one wants to buy our treasuries anymore for these reasons and rates start to go up and up and up and up, you'll see banks collapse. You'll see commercial real estate explode. And that has a reverberation, and the systemic nature of the banks that are connected the way that they are very quickly can create a very scary event. So it's counterintuitive when you think, well, they're lowering rates, so isn't that good? It's really not good. You're lowering rates when you're 65% away from your target rate at 2%. So you didn't beat inflation, you waved the white flag. You're lowering rates when stocks are at all-time highs, when cryptocurrencies are at all-time highs, when real estate is all-time highs. This is the same mistake that we've made forever, where you mess with Mother Nature, you mess with interest rates instead of letting the market dictate where they should be. The Fed does it, and it creates all of these distortions and misallocations and the price discovery in all of these assets where the price to earnings ratio is way out of whack, and the prices are so high and only going higher. At some point, that is only going to get more difficult as rates move higher, let alone financing the debt, let alone all of the commercial real estate resetting. So it's a scary thing. And it's basically the market's way of saying you're trapped. Either you deal with these things and deal with austerity and reining things in and paying the piper, paying your bar tab, or you continue to do more of the same that all politicians do, and that is to choose inflation and suppression of interest rates over making the tough decisions. We can do it longer than most people or most countries because we're the world reserve currency, but we're at that point where we're struggling to meet our interest obligations, and that's when empires fall. We're very close to it. I mean, if by 2031, according to the Congressional Budget Office, which is a nonpartisan deal, that all of the tax revenues go to just to pay the interest on the debt and the mandatory entitlements, which aren't even on the balance sheet, they're unfunded liabilities. So that's not even part of the 36 trillion. That's off balance sheet. 99 trillion shortfall in Medicare Part B, 22 in Part D, 77 in Social Security. How do you do that? Even with a balanced budget, even with trimming all of the fat of the government, you still got the same problem. And so as they continue to push down rates, which only blow up asset prices, create a weaker dollar and more inflation, people say, I'm not holding those 10-year treasuries. We demand much more. And that's, you get to a point where it starts to break the economy. And we're not that far away from it, actually. So if there is a deep state, and the deep state wants to mess with Trump, you know, it would be with the banks. It would be with letting interest rates spike somehow and blow up the banking system, and the systemic nature of it all with bail-in legislation that no one knows about is a very frightening thought experiment. So it's as crazy and doom and gloom as it sounds, it's really not that preposterous, actually.
I don't think it is. And, you know, a lot of the guests we've had on, you know, have these projections for precious metals at certain price points, right? And maybe $7,000 gold or whatever for, you know, different reasons that they get to those levels. And, you know, we've talked about triple digit silver for years, and the reasoning behind it, it's not that crazy. If you have, you know, gold, the gold silver ratio just fall to where it's been before, you have $100 silver and more than that. So these kinds of things aren't that crazy, but it does kind of make you think, if we do see a world with, you know, $7,000 gold or $100 silver, what will the economy look like? And maybe our last viewer's question can be that, can an economy still work well if silver rises to over $100?
I mean, who knows what that means? Because who knows what the real price of silver should be? It's been held back for so long. What does that mean? You know, yeah, certain things will cost more money, but again, if you make an iPhone that needs a fifth or a quarter of an ounce of silver, you don't care what silver is. You buy it, you accumulate it, you need it for your product. The bigger question is, what does the dollar look like? And I think it's important to understand. I mean, let's just do a thought experiment. In 1964, gallon of gas was 35 cents. That's when silver was in the coins and in quarters and dimes, which, you know, right now is roughly worth 20-ish plus times the face value. So 35 cents today, if you use just the melt value, is over $7. For a dime and a quarter pre-65, cost of a gallon of gas is $3.50, $4. So that dime and that quarter buy you 2 gallons of gas. That 35 cents wouldn't even buy you a drop of gas. So when you pull the real money out of the currency, this is what happens. You can look at the price of gold. And 10 years ago it was $1,200, and today it's over twice that. The dollar, with money creation running at 7% per year on average for the last 10 years, 7 into 72, which is the law of 70 seconds, says that in 10.2 years, your principal would double, or in this case, the dollar would be worth cut in half, because at 7% money creation, which is inflation, you are inflating the money supply by creating it, and everyone thinks it's rising prices. That's just a symptom of it. But all of the money creation at 7% per year means 10 years ago, our dollar bought twice what it did today. So did gold go up by over 2 times, or did the dollar lose half of its value. When Trump took office in 2016, gold, I think, was 1,600. And so here we are over $1,000 higher. Little by little, it's been creeping up. And at the same time, the value of the dollar has been decreasing. So ultimately, yes, we could see an environment where the dollar loses purchasing power. That's what typically happens when you drop interest rates. And he advocates for a weaker dollar. That's what he wants. So, who knows? I would just simply say that the real price of silver is much higher than it's being sold for. That's the truth of it, because they've done a real good job at holding it back. And so what is the price discovery? I don't know. But I guess really what he's saying is, what does that mean for the economy? I think it means trouble ultimately. It means inflation. It means if you hold your wealth in dollars, you're in trouble. I think you will lose purchasing power rapidly. But yeah, again, we're a resilient country, and let's just hope that he can unify this country. I think even the Democrats are seeing that the moves that he is making they're revolutionary. He's getting rid of the retreads. He's bringing in young people, an average age probably about your age, or even in that range, and in their mid 30s and early 40s, and bringing in people that were successful in the real world, and so all of these things are very positive. But here again, his policies will be ridiculously inflationary, and we must go through a period of very difficult times. And I think that comes at the expense of the dollar. That comes at the expense of inflation. And I think the way to get out of the way of this is to hold tangible assets. I mean, look at, for example, Bill Gates. What is he? He's the largest landowner in the United States. Not to say that land isn't going to get hit, but it's something that will come back when we get through to whatever that means. And I think holding commodities and assets is very, very important right now, and mitigating your exposure to traditional assets. And it's like Adam Lipinski. I keep saying this. It's very ominous. Adam Lipinski, the head of the Polish National Bank, says when someone shuts off the power to the global financial system, which is based upon electronic accounting records, this is why Poland holds gold. They've been buying more than anyone the last few years. What the hell does that mean? Why would he say that someone's going to shut off the power to the global financial system based on electronic accounting records? And when the whole thing goes poof, well, we have gold for that. I mean, are these things possible? Who knows? But I think you hold gold and silver right now, and you worry less about what the world looks like when this all blows up, and be more thankful that you've gotten out of harm's way. I do believe that if you hold all of your assets in dollars, you're in trouble. And if you hold lots of money in the banks, you're in trouble. What does the systemic nature of all of this look like? I don't know, but I do know in my heart and soul that we have a good deal of mud to go through to get to the other side. And I'm optimistic if he does a really good job, we might have Republicans in office for the next 12 years, which will hopefully get us to the point where we can all be proud of this country again. And maybe at that point, I'm telling people to sell gold and silver. I don't know, but we're nowhere near that point right now.
Well, Andy, we really appreciate your time as always for this weekly market update. Are there any parting thoughts you'd like to leave with our viewers?
I think we said it. I just think that let's just all say a prayer for our country, that for the safety of this current administration coming. And let's be optimistic. But let's also be realistic. And I don't know. I think that things will start to be much clearer as we get closer to January and into February. Um, let's see what happens with the banks. Don't have more than $250,000 in any bank account, please. And if you haven't researched what happened with the Bank of Lindsay, Oklahoma, Google bank failure, Lindsay, Oklahoma, understand that half of the uninsured deposits are gone. It's a trial balloon, in my opinion. Get out of the way of the regional bank issue, and we'll keep trucking along, Elijah. And it's nice to have a little bit of calm where there's not always something chaotic to talk about. But I do have a feeling that there'll be plenty to talk about as we get closer to the end of the year.
Andy, once again, thank you so much for your time today, and God bless.
God bless you too, buddy. Thank you.